Let's talk about the 90s.
90s.
Are we embarking on a time like the 90s? The 90s is pretty interesting.
Yeah, at the start of 2024, I actually find myself thinking about the 1990s quite a bit. Some are wondering if it's the end of the 1990s. Was 2023 like 1999, and are we going to have a popping of a tech bubble? I don't think so, but there's a risk the equity market has some tough years ahead given the gains of the past few years. And then if you go all the way back to the start of the 1990s, 1990, there are some issues on the table where inflation, not as bad as we had recently, but inflation was a problem. Greenspan had to do something about it in 94, but also the deficit was a problem in the early 90s. And we have yet to do anything about the deficit. And a lot of people talk about 1995 being a good analogy for this year because of the soft landing. That may be the case, but we have an election this year, we have a deficit to deal with, and we have plenty of geopolitical concerns that are much more adverse than the case in the 90s.
Well, if I recall, by 1995, we did have the Carter tax plan that was starting to address some of those fiscal questions.
Clinton. That's right. So Clinton, to his credit, and don't forget, this was a big election issue in 1992, the deficit. And in the middle of 1993, Clinton, with Congress, passed tax hikes that took effect in 93 and played out in 1994 fully. And they put together a plan to reduce the deficit over the 1990s, as they successfully did, and we went to surplus. And then in 1994, with the midterm elections and the Republicans coming to power, a lot more was done to improve the fiscal situation and improve spending.
So David, let's talk about how you're going to make money the rest of this year. You've already said that you think the valuations are robust in big tech. Where are there places you think that maybe they're not quite as robust? Maybe we're missing some things.
Well, I do scour over the equity market all the time to find some of the best opportunities. We still are bullish on big banks. We see the best value at the big banks in the U.S., and they're doing very well the past several weeks as the recession fear has dissipated. But I also like big biotech and pharmaceuticals, because there I see strong long-term growth potential that is at a very undemanding valuation right now. So tech companies, they're great, but the valuations are so demanding that even if these companies do wonderful things, they might not live up to the expectations of investors, particularly over the short term. And I'm looking for companies where there is that big upside optionality that investors are not pricing. We see that at pharmaceuticals and biotech.
Well, what about pharmaceuticals? What's going on specifically with pharmaceuticals? I mean, for example, Pfizer's had a bit of a struggle recently.
Yeah, Pfizer's definitely had a bit of a struggle. And then on the opposite end, you've got names like Eli Lilly, which are going gangbusters, and then everything in between. And the companies are going through, we've known this, a transition period from old on-patent drugs to the new pipeline. It takes time. You never know which in the pipeline is going to be the hit and when. Like I said, the valuations are really on demanding. Now we're going into an election year, and a lot of investors are shy to buy healthcare stocks during an election year. I might be a little bit cautious on some managed care and prescription drug benefit managers, but the innovators in the space, the medicine makers, this is what we need. And I hope the policymakers allow these companies to reach for the stars.
What about the industrials? Because we have some real movement around in the industrials, people trading pieces of companies here.
Well, there are a lot of parts of the industrials. And aerospace and defense doing terrifically, makes a lot of sense in the world we live in, both defense and aircraft demand and air travel being robust, and the demand is out. We can make these planes on time. There's a lot of demand for them. So aerospace and defense is doing well. Machinery has some cyclical risks, but the valuations are not so demanding there. And we have some good capital goods producers in the United States. Now, the one thing that I'm cautious about are a lot of the transports, air freight, even with the recent rally at railroads. The economy, I think, is going to be slow, especially on goods. And a lot of commodities this year.
And briefly here at the end, what about climate in industrials? Because some of the industrials are really going for climate.
That's right. There's a lot of electrical equipment companies. There's a lot of clean energy plays there. People also tend to not only overlook industrials as a clean energy play, utilities are big players in that space. And as long as the long-term treasury yields stay behaved this year, I see a very good bond substitute play in utilities.
And you've got some federal money coming in.
Yeah, that's right.
right? From the Inflation
That's
Reduction
right.
Act and
Yeah,
things like that.
to improve the grid.
Yeah,
Yes.
exactly. Okay.